Let's look at some of the best funds available to invest in, how they've done in 2024 and their longer term performance. So I've gone to the website pickafund.com and I've filtered on the 5-year track record of global funds, and the number one is Royal London Global Equity Select. This is something we featured in the past, but the problem has been that the management team left to be replaced with a new one, and the fund saw quite a lot of outflows in 2024. And the result was that although the performance was pretty good, over 20% growth, it slightly lagged behind some comparable funds. And so the likelihood of this fund outperforming in the future isn't so certain as it once was. So after Royal London, we've got the Amundi Global Titans 50, which is denominated in euro, and it's only on the Hargreaves Lansdown platform. But something that's more readily available is the L&G Global 100. It has very low fees at 0.1%, and it features the 100 largest by market capitalization companies that have a global spread of revenues and assets. And it's quite concentrated in the Magnificent Seven, but I feel that the risk profile of this fund is known because it's passive, so it's much more easy to understand the exposure you've got compared to a global tracker, and you can manage that as appropriate. I think that the largest companies are those that are well run, they've got a great spread of businesses, often quite high barriers to entry, and I'm quite keen on things like trend and momentum. So I'm not so convinced that the technology trend has run its course and that there's going to be a correction in 2025. So for the moment, I'm still very keen on the L&G Global 100, and I also think in the longer term it will also do well, even if there are a few blips and pullbacks along the way. A bit further down the list at number 9 is JP Morgan Global Growth and Income. This investment trust aims to pay 4% of its net assets every year, and the dividend is paid quarterly. It essentially gets the best ideas from a whole range of JP Morgan analysts and then combines it into one global fund. So it's kind of quite similar to a global tracker, but you've got the benefit of receiving a dividend. And I think that the number of analysts indirectly working on this fund means that there's a lot of manpower, a lot of thought power behind the analysis that's going into these selections. And so far it's done really well, and hopefully that will continue into the future. One fund we've featured quite a lot on this channel is WisdomTree Global Quality Dividend Growth. And sadly, its performance in 2024 was quite a bit below a bog standard global tracker, which tends to suggest that a lot of outperformance came from companies that either weren't paying a dividend at all or paying a very low dividend. So they are in the WisdomTree fund, but a much lower weighting than in a standard global tracker. Overall, I'm surprised at the magnitude of difference between these two ETFs. And hopefully in 2025, the WisdomTree might show a slightly better performance relative to a global tracker. But it is kind of swings and roundabouts depending on really where we are in the economic cycle. And I think that the older you are, the more you prefer the filters of dividend paying companies and a dividend weighting and strong balance sheet and reliable earnings growth. If you want to look for a bubble within funds, then there possibly is one with 3i, which has had phenomenal performance over both 5 years and 10 years, and even 1 year where it's grown by nearly 50%. However, it's currently on a 58% premium to its net asset value, and about half of the company is invested in Action, which is a discount retailer in continental Europe. So the portfolio is quite concentrated, and you might get some sort of revision going on there in 2025. It's also interesting to note the performance of a couple of Indian investment trusts. The Ashoka one is interesting because it has no management fee, it only has a performance fee, so it only pays to its management company if it's actually beating its objective. And then the other one here, the Indian Capital Growth, has also done really well, or particularly over 5 years, not quite so much over 1 year. And I coach quite a lot of people that have ties to the Indian subcontinent, and pretty much all of them are keen to invest some of their money in India, which certainly says something. When it comes to the US, Pershing Square has the leading record over 5 years, although this is a hedge fund, so it can go short, and it can also hold things like bonds and all kinds of contracts within that fund, though it didn't have a particularly good 2024. Next up is the Nasdaq 100, which I think is a great index to have as part of your satellite holdings, because it can be quite volatile from time to time, although it does always have the winners in the technology and kind of biotech sectors as well. And it's interesting to note that I've never found an active fund that benchmarks itself against the Nasdaq. And I suppose the funds would say they want to invest on the New York Stock Exchange as well, but then I'm also partly thinking they're a little bit scared of benchmarking themselves against such a phenomenal index. And then also on the list, coming in at number 9, is JP Morgan American, which I think is a very interesting active fund. It's an investment trust. The fees there are quite reasonable compared to some of the other active funds. So an interesting thing about JP Morgan is that it has exposure to both value and growth, maybe 50-50, but the mix can vary as this chart shows. And it also has quite an interesting top 10, fairly concentrated, but maybe not too bad. And then it also invests in both large companies and smaller companies. So what you're getting is quite a mixture of US companies in there. It's not solely a growth fund, it's not solely a large cap fund. And hopefully by navigating the economic environment, it can produce decent returns throughout the economic cycle and not be locked in on one very specific strategy. If you're interested in learning more about funds, including Ashoka India, JP Morgan Global Growth and Income, JP Morgan American, you can try the Fund Hunter website. Here are the best performing stock markets of 2024. Argentina is at the top of the list because they got inflation largely under control. US coming in at number 4, which is quite surprising given the size of that stock market, but it just shows that the Magnificent Seven and the large cap tech have really continued their journey of marching onwards and upwards. And when it comes to 2025, I think it's really anyone's guess as to where the finishing positions will be in 12 months' time. Technology had a very good 2024, and you could argue that you get enough exposure to technology through a global tracker, or you could say that you want to own businesses that really change the world, in which case for your longer term portfolio, so 10 years plus, you might want additional exposure to the technology sector, because as Bailey Gifford say, there are a handful of companies that generate truly superior returns, and you do kind of want exposure to those if you want to get decent returns from equity. And at the other end of the spectrum, my favorite combination, Vanguard and bonds, had yet another horrible year with negative returns. And the problem with this fund is that it includes some longer dated bonds, and that's what's dragging it down because of the interest rate expectations that are causing a capital loss. The main thing to remember when you're investing is to try and minimize your fees. And here's someone paying nearly 2.6% of their portfolio in fees, which includes the platform fees, the fund fees, the advisor fees, and there's also 0.71%, which is huge, from fund transaction costs. So this advisor is kind of churning the portfolio to make out they're actually doing something, and then the poor customer is paying £900 a year for the privilege. So if you're interested in a sounding board to help you with your portfolio, this is a done with you solution, not a done for you solution. I don't give any advice. You can go to my website and take a look. My outlook for the UK stock market in 2025 isn't that great because I don't think we're particularly getting inflation under control, and some of the taxation and minimum wage efforts are really undermining small cap and UK focused companies. Also, I think the outlook for bonds isn't particularly good for 2025 either, so I'm largely going to stick to global trackers and US centric funds. 2025 could be an interesting year for investors. If you want to know how to pick winning funds in a bit more depth, then watch this next video.